On Business Incorporated today, it counts down to the commissioning of the multi-billion-dollar Dangote Refinery. It opens on Monday, the 22nd of May. And we'll have a conversation on implications as Moody's cuts Kenya's credit rating. Ghana earns $1.2 billion from small-scale mining activity in 2022. Good afternoon, it's Friday. Thank God it's Friday. Welcome to the final episode for this week, Business Incorporated. I'm Ini John Mekwawa. Let's do business as usual, beginning with the market numbers. We see negative sentiment, all mostly African continent, starting with the NGX, 0.07, close negative, retain that sentiment at intraday. South Africa is, however, on the flip side, almost 0.5% positive at intraday, 0.42%. EGX for Egypt is 0.58 negative, and Kenya closed yesterday, well, losing that bullish run that it's been having since the beginning of the week, lost 1.64% yesterday, Thursday. We move to Middle East now and start with Abu Dhabi with negative sentiment, 0.19% down. Dubai also 0.43%, and still within there, Saudi Arabia is 0.59%. That's closed. That's what they closed with. Qatar is also closed, 0.33% is what they closed with on Thursday. Well, let's go back to Berlin now and see what's happening there. We have Lars Holter joining us to give us updates of some of those hot stories coming from there, ranging from the issue of the debt ceiling of the United States and how it's affecting them there, and then the climate activists also making transportation a bit difficult. Hi, Lars, good afternoon.
Yeah, thanks for having me. It was great, actually, but that's because I'm taking a local train to work. It's been terrible, however, for thousands of commuters who drive to work, because these activists, they're calling themselves the last generation, have been gluing themselves to roadways again, and they've been doing that for a month now. They said from the get-go they want to bring traffic in Berlin to a standstill. They've been pretty successful because there's a lot of them, and it only takes 1 or 2 people glued to the middle of a roadway to block one lane. 2 or 3 people are enough to block a whole road. And for some of Berlin's major thoroughfares, we've seen lines of 6, 7, 8 activists blocking those as well. And during rush hour in the morning or then on the way home in the afternoon, that means that long traffic jams appear within minutes. And it takes police a while to get activists off the street, especially since some of them have now started to use concrete instead of glue, and removing them actually damages the road too, leading to long-term problems then.
And what are the main issues with the activists?
Well, obviously, this is all about climate change and the fact that the German government is not doing nearly enough to reduce emissions. At least that's the activists' claim. But really, it's hard to argue. We've just expanded coal-fired power plants to generate energy. And in the midst of an energy crisis, we're looking at natural gas from abroad as a resource instead of investing more into renewables like wind and solar. Also, when it comes to traffic, Germany is extremely stubborn. We're the only country in Europe that doesn't have a speed limit, although it's been proven that a speed limit would significantly lower CO2 emissions from vehicles. We're also still investing a lot more in auto infrastructure than in alternative traffic concepts. E-mobility is growing at a snail's pace, and public transportation is also not as developed as in comparable countries. The last generation activists are also thinking in other directions. Recently, other than traffic on roads, they have been blocking the entrance to Deutsche Bank headquarters, for example, and that was in protest of the bank's financing of businesses in the oil and gas sector.
All right, Lars, thank you so much for that update, and we do hope this is resolved soon. Well, let's go to Asia markets now, where markets largely rose as 2 of the 3 streets major indexes hit record highs on Thursday night. And House Speaker Kevin McCarthy says that he is confident a deal can be struck on the U.S. debt ceiling by next week. We'll be watching closely at that. Japan stocks marked its best week since October as the Nikkei 225 rose 0.77% and ended at 30,808.35, maintaining the highest levels since 1990. Elsewhere in the region, China's Shanghai Composite slid 0.42%. Hong Kong's Hang Seng Index fell 1.5%. Australia's S&P AX 200 inched up 0.59%. South Korea's Kospi gained 0.89%, while Kosdaq closed 0.702% higher. Well, let's move over to the United States now. Stock futures rose slightly on Friday as Wall Street continued monitoring the situation surrounding the debt ceiling. Futures connected to the Dow Jones Industrial Average added 80 points and S&P 500 gained 0.24%. NASDAQ 100 futures were slightly higher. Now, let's take a quick roundup of yesterday's trading with our correspondent in Washington, D.C., Maria Bird.
The U.S. stock market rose on Thursday. The Dow Jones was up by 0.34%, the S&P 500 up by 0.94%, and the heavy-tech Nasdaq up by 1.51%. Economists saw that Walmart is showing great gains, which means that the American people are going out to shop again. This could mean that early signs of a recession are not going to pan out. It is also clear that even though the U.S. debt ceiling agreement has not been solidified, Americans are hopeful that the meeting between President Biden and House Speaker McCarthy was a success, and they believe that there will be an agreement before June the 1st.
All right, and from there we do go over to, we're supposed to have Juliana, but she did yesterday. Remember, we talked about the Oyo State Business Summit holding in London, and we should get the governor and some of the participants at that event tell us the updates of what's going on there really soon, telling us how the event has started today and what's going on there. What are some of the achievements, even though it's day one, and what are the expectations from that Oyo State Investment Summit?
In Oyo State, we have good vegetation, which will promote agribusiness. It's one of the states in Nigeria that has both forest vegetation and savanna vegetation. So that is a great advantage. In the areas of solid mineral and mining, quite a lot, gold, lithium, and other solid minerals also in Oyo State. You have seen the governor being a private sector person, and that makes business discussion much easier, and it has also led to improving on their ease of doing business. Right now, the focus of Britain in Africa now is Nigeria. And with the incoming administration, we expect a lot of investors to take advantage of the situation in Nigeria to invest. You know very well that the issue of COVID has really affected investment and relationship in the past. But now we have come out of COVID, and I strongly believe that investors, especially British investors, are ready for the Nigerian market. So this is coming at a very good time. And the governor, having spent one term, he has known the terrain, like he assured, and he will want to leave Oyo State much better than he met it.
It's been so far so good. I like what I've seen in terms of the excitement and people wanting to know what we're doing in Oyo State. and what the future holds for us economically. And I think I can say that we're seeing investors, jostling to actually come invest in our state.
Why London? What is it? What's unique about the United Kingdom and the diaspora and the foreign investment that comes particularly from this nation?
Well, if you are listening to the ambassador of Nigeria to London, first, this is almost like a major financial hub, for the world, and also you have a lot of Nigerians in here. I said in my presentation that you have to follow the data. When you follow the data of remittances, that is money available within the diasporan communities here for investment back home. You know that London is actually going to play a major part, and that's why we said, well, let's create the excitement here, and let's get people, diasporans here, to come and invest back home.
That's the governor of Oyo State back there in London, holding that Oyo State Business Summit with us. Juliana, that was Juliana's voice right there, and we know that she would readily give us a wrap-up, a summary of all of that next week. So it's 3 days to that commissioning of the much-awaited multi-billion-dollar Dangote Refinery, and there are so many expectations from different sectors of Nigeria and across Africa. Let's find out some of that. We'll give you more of that here on Channels Television subsequently, but just a little bit of it. Esther Mayowa, senior analyst with Financial Derivatives Company, joins us from Victoria Island to share some insight. Hi, Mayowa. I expect that smile to, in fact, be a big laughter, because this is something we've been expecting for years, and now we are seeing it come to pass, and we expect it to bring a lot of differences, or bring a lot of positive benefits and advantages to Nigeria as a country, to our economy, to our GDP, to our FX issues, a whole lot of expectations, Mayowa. But what are you hearing about expectations and some impact that should be coming as Dangote Refinery is commissioned on Monday?
Thank you very much, Amy, for having me. And I love the whole analysis and all that you had to say about the impact. Really, yes, it's actually a world-class project and a world largest single train refinery. And so about 650,000 barrels per day capacity. And so it has large benefits for Nigeria, even though it's just a necessary condition for the Nigerian economy, but not a sufficient condition. But first of all, let me start by saying the impact we're going to see basically is the fact that there's going to be increased supply of petroleum products, and because of that increase in supply, we're going to see a reduction in downtime actually. And so because there's that reduction in downtime, it will increase productivity generally. Increase productivity for sectors across Nigeria, and as a result of that, we're going to see an increase in the general level of employment, even though in terms of the petrol part of it, we might not see that production, probably until close to the end of the year, or towards the beginning of the year. But we're going to, when this refinery fully starts, we're going to see that improved supply and that increase in productivity. And considering the fact that there will be reduction in logistic costs, it would actually, the sectors across Nigeria, because all sectors are literally going to benefit from this. And so because of that, there will be increased productivity and employment. And when we look at it from the government's perspective, in terms of revenue for the government, we're going to see an increase in government revenue. Why? Because the Dangote Group is actually one of the highest tax-paying company And as a result of this business that is coming into play, they will have to pay more tax, right? So that would actually boost government revenue. And also looking at the fact that there's going to be increased productivity in the economy, there's going to be increase in general level of employment, jobs will be available for people, and then the federal government will be able to tax, increase, generate their income from that increased tax. And so that's what we're going to see.
Yeah, at least in the immediate impact. But we know that NNPCL has said they'll start giving, I think, about 300,000 barrels a day crude to Dangote from next week. That's after the commissioning. How soon do we expect that, the refined product will start getting into the market for local consumption?
Well, I do know that this refining process will actually be in phases. So we might not see full supply from the refinery yet. It's going to be in phases, but definitely by towards the ending of the year and early next year, we're going to see full supply from that refinery.
All right. Thank you so much, SMIOA, for giving us that insight. We're on this, Channel TV is on this, as we congratulate Dangote and everyone connected to this project. And, of course, the Nigerian economy. So congratulations to you, too.
Thank you very much for having me.
Welcome back to Watching Business Incorporated here on Channels Television. And we start the second half of the program with what's going on in Kenya. We see that global ratings agency Moody's has cut Kenya's senior unsecured debt rating, as well as the long-term foreign currency and local currency issuer ratings to B3 from B2. The agency said the rating downgrade is driven by an increase in government liquidity risks. The agency also added that the Kenya's domestic funding conditions have deteriorated considerably over the past 2 months, with very low net domestic issuance contributing to financing shortfalls and delays in government spending. Well, let's find out what this means to Kenyans and to the country at large with Matt Kindiga, Practice Lead Front of View, joining us now. Hi, Matt. Good afternoon.
Hi, good afternoon. Thanks for having me on the show today.
Good to have you. So what does this downgrade in rating, what exactly does it mean for Kenyans?
Yeah, so not great, especially for government finances. As you mentioned, the government has really struggled to raise funding domestically. This is quite a bad sign that it's really struggling to meet its revenue goals. What it does also likely mean is that the government will face rising debt servicing costs in the country. And this is because debt will be less desirable, or Kenyan debt will be less desirable to hold. We expect interest rates to also rise on Kenyan debt. What this tells us is that the investors are not convinced that the Kenyan government has full control over the outlook for its government finances. It doesn't necessarily have a credible plan to stabilize its public finances. We think there is some risk of Kenya facing debt distress by the end of this year, or more likely in 2024. And this is because there is a 10-year, $2 billion Euro bond that is likely to mature, or expected to mature in July next year. So this is when we're likely to see the most pressure facing government finances in Kenya.
So we see a lot of African countries, sub-Saharan Africa especially, getting back to IMF, getting loans. We've seen Ghana, they got their $3 billion. What is it that can change the trajectory of Kenya at this time? Do they have to go to same route, or are there other things that can actually change their story?
Yes, so Ghana is a bit of a cautionary tale for countries like Kenya, which is arguably, going down a very similar path that Ghana went down before it defaulted. Ghana's default will likely focus minds amongst investors, but also amongst the Kenyan government's approach to debt restructuring. So we would expect the Kenyan government to try to preempt a fiscal crisis by very, very actively and assertively trying to renegotiate its debt, restructure its debt with its creditors. So certainly we do expect a very strong push from the Kenyan government side. Although we are also expecting to see the Kenyan government implement quite severe austerity as another alternative, because it simply doesn't have the cash to continue to spend and to invest. So we are expecting to see delays to infrastructure projects, for example. Procurement of goods and services by government departments and state-owned enterprises will fall for sure. And we are also likely to see a decline in civil service wages, or at the very least, arrears build up for civil service wages. And this is because the government will prioritize debt servicing. It will want to avoid a default at all costs. And another thing that the government will be doing is raising tax revenue by increasing taxes, and also tightening down on, or clamping down on, tax evasion and tax avoidance. So a range of measures that we expect the government to do in order to try to avoid some sort of debt crisis emerging.
Yeah, and I'm sure those moves will also have its own costs to the economy. So when we balance it out, how do we see projecting economic growth for 2023, the value of the Kenyan shilling and all of that? How does this fit into that?
Yeah, so the summary really is that it will negatively affect growth quite clearly. We have already downgraded our growth forecast for Kenya for this year and next year. For this year, we were previously forecasting 5.5%. We're now forecasting 3.7% and a similar figure for next year. Bear in mind, this will be the worst performance for the Kenyan economy if you exclude the effects of the COVID pandemic in 2020 since at least 2009. So really not great for growth. And we are likely to further downgrade Kenya's growth forecast for this year because of the deteriorating public finances. We are also expecting to see this aggravate the depreciation of the shilling. Our current view is that the shilling will probably end the year at close to about 150, maybe 160 per dollar, although it could go even further than that, depending on how bad the government's public finance state becomes. In terms of why this will affect the growth outlook, mainly because, public finances, public spending, investment is a very large source of aggregate demand in the country, and we will see this being removed from economic growth. However, it is worth remembering that we are still expecting the economy to grow. There are industries that are still doing quite well in Kenya, especially in the private sector, specifically in services industries. This is a trend we are seeing across sub-Saharan Africa. Services industries are very resilient. Although growth is slowing in those industries, they still offer a source of demand and will be keeping the economy afloat for our foreseeable future. So certainly a much more negative outlook for Kenya's growth in 2023, 2024, but not necessarily a recession on the way.
All right, so resilient Africans with resilient economies. Thank you so much, Matt, for giving us that details.
Thanks for having me on the show today.
All right, from Kenya, we go to South Africa, where consumers may face a tough reality, and that's because of a number of factors. Analysts are warning that South African Reserve Bank will have no choice but to raise interest rates next week. At the end of March, South Africa's central bank surprised markets by raising repo rates by a higher than expected 50 basis points, which put the repo rate at 7.75 points, with the prime lending rate close to 11 points. Recent rand weaknesses caused by the country's power crisis, geopolitical concerns, and high inflation suggest another hike is on the way when they meet on Tuesday. The rand is trading weaker against major currencies. And we close out in Ghana, where the country's small-scale mining has been contributing increasingly to the nation's gold output, as the sector produced a total of 12,405 ounces of gold last year. The country's Minister of Lands and Natural Resources, Samuel Abu-Jinapo, made the statement when he was speaking at the opening of a two-day transformational dialogue on artisanal and small-scale mining. It said it brought to the nation almost $1.2 billion in export receipts, adding that all diamonds produced in the country in 2022, which amounted to 82,251.99 carats and generated $3.9 billion in revenue, were from small-scale mining. Mr. Jinapo said that small-scale mining sector had been the source of employment for thousands of people and supported the lives and livelihood of millions of Ghanaians. A good note for Ghana and a good place to end the program today. Thank you so much for being a part of Business Incorporated all through the week. We'll do it again next week. I'm Imi John Mekwa. Do remember to join us tomorrow. There's a special on Dangote Refinery at 7 p.m. during Capital Markets. You don't want to miss it. So join us then and have a great weekend.